Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, November 16th, a mildly lower day in grains. Let's take a look at the grain edge trading platform and see where we closed. In Chicago, corn losing 1 3/4 cents, just below $3.40 a bushel. Beans off 4 1/4, and wheat in Chicago off 2. This comes on the heels after yesterday's relatively strong close at the end of the day, especially in soybeans that closed up higher, 7 cents yesterday. But news today was pretty light. There wasn't anything really earth-shattering to talk about. Let's start first of all what's come to be sort of the norm, which is the morning export sales announcement from USDA. This time 165,000 metric tons of soybeans that were sold to China. That brings the 3-day total for the week up to 865,000 metric tons of beans, and we'll be talking about later here what the expectations are for tomorrow's weekly export sales report. In other news, in outside markets, oil prices were mostly unchanged, although they were very volatile around the announcement of the EIA stocks numbers. Those numbers showed a big build of 5.27 million barrels versus expectations of 1.48. So while that was certainly bearish, the market continues to focus on what may happen with OPEC at the end of this month. Leaders are talking about the likelihood that there will be an output cut come November 30th at their meeting. They really right now seem to be only talking about or the stumbling block seems to be how much Iran can be capped out at, whether it'll be 4 million barrels a month or 3.7 million barrels a month. Most insiders there think that that will resolve itself and they will find a compromise to lead to an output cut by OPEC countries. In other EIA news, ethanol numbers were supportive today, coming in with higher production. 1.02 million barrels per day, up 15,000 barrels on the week, or per day on the week. And stocks, on the other hand, were also supportive, falling 620,000 barrels on the week. So overall, that was certainly supportive for ethanol, where we've seen margins that are favorable and continue to keep corn moving through the system. Let's switch gears and talk about the export situation. Every week we're going to be talking about how we stand competitively in the world market across the three major grains, corn, soybeans, and wheat. And to do that, we're going to look at spreads between the Gulf and FOB prices from other major competitors. So what we have in front of us here is a chart or table showing the spread of foreign countries to the U.S. Gulf prices for those various commodities. And what we're looking at here is sort of relative changes over the week and over the year and where we stack up. So if you see numbers in green, that's bullish for U.S. grains. If you see numbers in red, that means bearish for U.S. grains compared to last week. Let's start first of all with corn, where it was sort of a mixed bag on the week, where we saw some improvement in our export competitive position, especially in Argentina, where Argentina's prices were $3 a metric ton lower relative to the U.S. So, and likewise, about a similar magnitude move when we compare the Europe FOB price and the Gulf price. So that was certainly sort of a mixed bag where we had Brazil and Ukraine falling. Of course, Brazil is not exporting any corn this time of year, or this year, because of the shortage they have there. In soybeans, here's what's troubling, is we have had a very good run here, especially in the last 2 months with export business, but we're starting to see our export competitiveness start to erode. These numbers in red show a deterioration in our competitive position. Last week, we were only $3 a metric ton above Argentina's price. Now we're $10 a metric ton above Argentina's price. Likewise, a $5 a metric ton swing between us and Brazil to the downside for us. So that is troubling in my opinion, because obviously export demand has been what has been holding this market afloat around the $9.70 to $10 mark for the better part of 4 or 5 months. In wheat, we've managed to improve in the last week, especially when we start to look at Black Sea markets like the Ukraine and Russia, where they have been continually inching higher for the better part of 2 months. So our wheat price continues to remain fairly competitive. We haven't seen a big uptick in business as a result, but it's still year on year is better than it was last year, which is supportive. Tomorrow, look for export numbers from USDA at 7:30 Central Time. Expectations going into that report 400 to 600,000 metric tons for wheat, 900 to 1.2 million metric tons of corn, and 1.2 to 1.5 for beans. So those are the expectations, and we'll see what USDA throws at us. Let's switch gears and talk about the weather situation. La Nina is officially in force, although it is a weak La Nina according to the Climate Prediction Center. Nonetheless, that tends to have certain impacts, and let's talk about what those impacts can be, and especially in South America, which we'll talk about in a minute. But first, let's talk about what a La Nina now likely means for the winter ahead in the U.S., and that particularly means colder and more snow in the upper Midwest and the Midwest overall. Meanwhile, in the southern plains, they see a dearth of precipitation, lack of precipitation during La Nina years, and that's certainly problematic in the southeast where they're already dry, and even the southern plains of Oklahoma and Texas are dry. Maybe not historically drought conditions, but they're certainly starting to enter that. So likely to see these types of situations line up in the December to February time period. More precipitation, more snowfall in the upper Midwest, less moisture in the southern plains, which would be problematic for wheat. Now, where La Nina tends to have the biggest impact is in South America, and obviously they're off to a good start with the growing season, but there is an expectation with the La Nina in place that precipitation in that central Brazil, southern Brazil, Argentina area would start to dry out. These areas in brown tend to see less moisture in years of La Nina. So that is certainly something to watch as we get into the growing season. Right now they're obviously in the planting phase, so there's a lot of growing season left. But central Brazil is already a little bit dry. Argentina is, on the other hand, a little bit wet. So there's still a lot of growing season left. This could have some serious impacts for production down there. Let's talk about the soybean action today in January contract and what we've seen on an hourly chart. We started the week with a gap down, and we left that gap at 9.99. That tends to be our overhead resistance right now. We tried to make a run at it overnight. We talked about the strong close yesterday. We saw a continuation of that in the night session, but by about midnight, that rally tended to fade. We didn't quite get to the 9.99 mark and managed to close lower on today's session. So right now we're sort of range bound between the 9.75 low that was established early in the week and the 9.99 high or gap that was established on the opener this week. So watch for tomorrow's export sales report. We'll be tweeting them and talking about them on tomorrow's Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation, by all means, visit us online at grainhedge.com. Take a free demo of our trading platform. Take a look at our technical alerts email and morning comments that come out every day. Have a great day.
As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.